Welcome to the Ferrari Financial Weekly News Summary. The big story this week, of course, and for the last 2 weeks, has been the rather upbeat earnings reports coming out, where, generally speaking, earnings have exceeded analyst estimates. The hike in oil prices during the middle of last week certainly helped to boost the oil sector and keep the market on track for really quite a spectacular week of gains. On Thursday, of course, the Dow broke through the 13,000 barrier for this new high that everybody was hoping for. We're still not convinced that it will hold for much longer, as I think the market is ripe for a pullback. We just haven't seen it yet. And the fact that the S&P didn't quite show the same enthusiasm probably proves that point. Let's take a look at this week's market chart analysis. Get an idea of where the market may be headed in the next week or so. So looking at the long-term 3-year chart for the Nasdaq Composite Index, we can see the trend that has formed over the last 2.5 to 3 years, and if I draw the long-term trend line through the main points, it looks something like this. Let's fix that on the chart. Here we go. Now you can see that the trend has in fact returned a number of times over the last 3 years, and even though we've experienced a good rally over this last 9 months or so, we are at a crucial point here. The problem is to decide whether this is a consolidation that's going on, or whether in fact the high that we had about 5 weeks ago, and then the sudden drop due to the Russian unravelling of their stock market, which also occurred on very high volume. If you can see this volume spike down here, that sell-off occurred on very high volume, which is significant. Also significant, we feel, is the fact that the rally over the last 5 weeks here has been accompanied by a decreasing amount of volume. Can you see how the volume at this point here has in fact steadily decreased, and in fact has only just increased to normal levels again during this last week, indicating that we may be approaching another sell-off time. Therefore we feel that a prudent small short position in the overall index tracker stock may prove to be a good short-term play at this point, as probably next week, if the earnings, the slew of earnings results due to come out next week don't prove to be uplifting for the market, we could quite easily see another sell-off from this point. This could mean that simply the consolidation is continuing, or in fact that the idea that this is a medium-term top, that this medium-term top is in fact forming, and we're liable to see a downturn again in the next month or so. We'll keep you posted. So with the Dow safely through the 13,000 barrier and the Nasdaq past the 2,500 level, we do feel that the psychological pressure now on investors is for a bit of a breather, a bit of a pullback. So the small short position on the overall market we suggested last week really still stands. We'll wait and see what happens next. That's it for this week. So tune in again next week, and until then, it's goodbye from London.